Your local bank is closed for the weekend, but the world's most pristine collateral never sleeps. I'm joined by Mauricio Di Bartolomeo, co-founder of Ledn, to dismantle the geographic monopoly of traditional banking. We explore how Bitcoin is the first asset in history that allows a borrower in Latin America to get the exact same interest rates as someone in the US or in Europe. And also why the 24/7 liquidity of Bitcoin, amongst other things, makes it vastly superior to real estate. And wait until you hear why Mauricio thinks that the banks are coming is a total myth, because their whole structure isn't aligned with an asset that never sleeps. All right, let's dive in. Mauricio Di Bartolomeo, welcome to Bitcoin for Millennials.
Thanks for having me, Bram. It's a pleasure. It's a few weeks coming, but we're finally here, so I'm glad we got it.
Yeah, I'm happy you're here too. And I wanted to start with Bitcoin as pristine collateral. I think many Bitcoiners talk about how, it's the world's most pristine collateral because it's borderless. It trades 24/7. If you want to or need to liquidate it, you can just do that instantly. In 2026, the fun part is actually I had to go to a bank last week, and it was closed when I had when I was able to go outside of the business hours, and of course it's also closed on the weekends, and that made me think of this question. And you're the perfect person to ask. Like, Bitcoin is always on, right? Like, yes. When you look at, I think it's trading time, Bitcoin has traded longer than all the stock markets together in their history, something like that, right? Yeah. What is the impact of that when you think about like risk management with what you're doing versus like TradFi with all their loans and all the traditional collateral is just different and also not available all the time. So I think you're probably the perfect person to ask as to how can people think through using Bitcoin as this collateral for lending, credit, stuff like that.
Yeah, so it's a great question, and I could chat about this for probably the whole podcast. But your question is around what makes Bitcoin pristine collateral. So let me start there, and let me make the case as to why Bitcoin is the world's greatest collateral for a lender, and then I will also make the case as to why it's the world's best collateral for a borrower. And then what we're going to do is I'm going to walk you through the difference between traditional loans and Bitcoin-backed loans, and the underwriting process, which is a very, very key point, which we'll get to. So let's start with the lenders, okay? So when you're thinking about pristine collateral from the point of view of somebody lending dollars to someone like you, Bram, right? What you want is something that can make you whole in the event that you default on the payments or on the terms, right? So historically, the premier form of collateral that we know in our society today is real estate, right? And real estate, if somebody misses payments on a house, you have to then go and evict that person. You then have to foreclose that house. You have to go through a very long sales process. You have to bring in realtors, which charge you very high fees, and that thing has to be in the market. And you have legal fees for processing the sale, and then it's a process that can take months, right? Like even years to get out of your position. So it is not very liquid. It's very good at holding its value, but it's not very liquid, right? Equally with a vehicle, with a car, right? If you issue a loan on a car, then you have to go repossess the vehicle. Then you have to go basically, sell it in the secondary market and then get your loan paid, okay? This has a lot of challenges, right? Because we just did houses and cars, but we haven't done houses and cars. A house in the Netherlands is not the same as a house in Canada. It's not the same as a house in Colombia. And so historically what has happened is because assets are geographically constrained, the service area of a bank or a financial entity was also geographically constrained, because a bank it was impossible to hand collateral to a bank in the United States, for example, as a Venezuelan, because the United States bank wouldn't have the means to enforce on that collateral. So that's kept asset-backed lending siloed.
Even if they could offer like a cheaper rate, right?
Correct.
Like they wouldn't even be able to operate in these markets.
Correct. So one of the brilliant things about Bitcoin and why it's such a great collateral for a lender is because, number one, it trades 24/7. So you can get out of the position at any time in real time. And it has deep liquidity, which is the other thing, right? It's one thing for the market to be on at all times, but how much volume can the market take at any given time and allow you to sell a large amount of Bitcoin without crashing the price, right? Like without necessarily making the pain worse. And so Bitcoin trades with very deep liquidity. We have, processed sales in the millions of dollars in the darkest hour of March 14th, 2020, during the COVID crash, when every other market was disconnected and out of business and there was no bids. We were processing Bitcoin transactions like nothing. Ledn has never had a Bitcoin-backed loan default, ever, in 8 years, and over $3 billion issued. We have been able to basically liquidate any loan that has to get liquidated, and every other time our borrowers have come back and paid the money, paid the outstanding loan to get their Bitcoin back, right? So for the lender, it offers you 24/7 liquidity. It offers you a lot of depth, and it also allows you to sell partial increments of the Bitcoin. You cannot sell a living room out of a house. You cannot sell the tires from the car. You can sell however many sats you want to basically reconfigure the risk of that asset-backed loan at any given time, right? And because it's 24/7, because it's infinitely divisible, and because it has very deep liquidity, it makes my risk management a lot stronger and better than any other asset-backed loan. Because with other asset-backed loans, the market may not open 24/7. You may have gap risk. So it's actually less risk to lend against Bitcoin than it is to lend against equities, than it is to lend against property, than it is to lend against homes. But we haven't even gotten to the best benefit for the lender, which is uniform underwriting. What does that mean? It means that you, Bram, have Bitcoin, and you can be in Europe, and I have Bitcoin, and I can be in the Caribbean or Latin America, and Billy, our friend, has Bitcoin in the United States, and the three of us come to Ledn. That means Ledn can underwrite you in the same way. My underwriting model doesn't change whether I'm in the Caribbean, whether you're in Europe, or whether Billy's in the US. It's Bitcoin. So that means I can give you the same terms. That was impossible before Bitcoin. So today, Ledn, one of the things that makes me the most proud is that if you're borrowing from the United States, or if you're borrowing from Canada, you're getting the same rates. If you're borrowing from Europe, if you're borrowing from Colombia, you're getting the same rates. That wasn't possible before Bitcoin, and that is immensely empowering for somebody not in the US or not in Europe, okay? Let's flip to the borrower. Why is it a great collateral for me as the borrower? It's a great collateral for me as the borrower because me in Latin America now have the same quality of collateral as Billy in the United States. Means Billy and I can get the same rates. So as a person anywhere in the world, this is revolutionary. Most people in Latin America, Africa, the Middle East, like if you're not in an OECD country, you never had access to credit. And if you did, it was a very different terms than every one of your friends in North America. Because you're not deemed worthy. Because your governments have no property rights on the assets that are in that country. But now we have Bitcoin, which is the same on my hands as it is in your hands, as it is in Billy's hands. So it doesn't matter where you go, wherever you live, Bitcoin opens access to financial services at fair terms. Number one. Number two, because you can send it anywhere, you can use your Bitcoin to access financial services from the platform you prefer anywhere in the world. So now people in Latin America can use a world-class entity like Ledn that's backed by Tether, that's backed by, White Sarcasm. Like we have very, very strong backers, and we have a strong reputation. We're based we're regulated and here in the Cayman Islands, we're regulated in Spain. We're soon to be regulated in the U.S. with our state lending license in California, and so you're getting access to the best cost of capital, the strongest risk management program in the world, at the fair rate, at the same rates that everyone else in the world is getting. So as a borrower, you're getting access to equal terms, fair terms across the globe. You can access your platform of choice anywhere you want, right? Like most places, like depends if regulated or unregulated, but the point is you have access and you have choice, right? And those two things are the main, to me, they're the main benefits for the borrower, right? And now you as a borrower can do a lot of great financial planning because when you're using a Bitcoin-backed loan as a borrower, when you're borrowing against your Bitcoin, it's most often not a taxable event. And so you can enhance your tax planning and get the liquidity you need.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now OnRamp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. OnRamp, strength in many, simplicity in one.
Now, let's differentiate. Now we've gone over why it's great pristine collateral for the lender and for the borrower. Now I want to talk to you about the difference in underwriting, right? In a place like Ledn, you can come past KYC and apply for a loan based only on the amount of Bitcoin you're using as collateral. This means that at Ledn, we lend 50% of the value of the collateral that's pledged. So if you're giving us $10,000, you can borrow up to $5,000. We do not look at your credit score. We do not look at your income. We do not look at 3-character reference letters that you have to get from your friends. We don't need that. To us, your credit worthiness is your Bitcoin. Traditional banks operate differently. You are made to believe that a mortgage is a loan on the value of the house. It is not. A mortgage is a loan against your income backed by a house. Here's the issue. If you have your own business, if you're a contractor, if you are self-employed, you do not have steady after-tax income. You could go to the bank and tell them, I want to buy this $1 million house and I have $700,000 to put as a down payment. I just need $300,000 from you as a loan to close on the property. And they'll tell you, great, Bram, what's your income? And you'll say, well, I have my own business. Last year, we pocketed $100,000. This year, we've invoiced over $200,000. Like, this is the pay, do you pay yourself? At the end of the year, here and there, yeah, like it's my own business, right? And they'll say, we're so sorry, Bram. Your income doesn't qualify for this mortgage. And they'll say, but guys, you'll say, I have $700,000 that I'm putting down. I'm remaining owing $300,000 and I have all this Bitcoin. Look at all this Bitcoin that I have. And they'll tell you, that's so cute, Bram. But we don't take that as collateral and we don't really care how much assets you own. We care about your after-tax income. And you'll say, but I'm self-employed. I don't have after-tax income. My business is actually quite successful. Look at everything my business has done. And they'll tell you, we're sorry, Bram. We need to see your capacity to service the debt.
Yep.
No matter how many assets you have, if you don't have after-tax income, you don't get loans from from traditional banks, and that boxes out every single person. Most Bitcoiners are freedom-loving, entrepreneurial, trying to be efficient. They're trying to keep themselves geographically nimble. They're moving to different countries. They're trying to be digital nomads. These people don't fit the nice little box that the bank wants you to fit in, right? And most of Bitcoiners are blocked away from accessing financing. And that's where Ledn comes in. At Ledn, the only thing you need to be deemed worthy for loans is to have Bitcoin and to complete KYC, because we're a regulated business.
I've never really looked at real estate like that. But now when you just think about the fact that, yeah, Bitcoin is just the same for anyone who would want to buy it, and you can just sell it like that to someone you don't even have to know or find, right? It takes a certain weight of everything that's attached to real estate. And obviously, then you can get the argument of you cannot live in a Bitcoin. Well, okay, that is true, right? But my counter argument is always, well, a home shouldn't be the preferred way to grow wealth. Do you understand what that constitutes and how that came about, right? And so I think that's that insight I just wanted to share, because that helps you, but I think it's also for the individual holder, and also combating TradFi, right? You can actually operate globally, whereas if a local bank would want to issue Bitcoin loans, or they wouldn't be able to do that, probably, right? Like, so if a local Dutch bank wants to start doing that, they cannot service people in Portugal or Switzerland or whatever, because they have their more like country risk and stuff like that.
Yeah, there's certain. I mean, they could get set up with similar regulation, with similar registrations that Ledn has from a compliance and legal point of view. So,
or like, do they want to, right?
But they don't know how to operate this. Yeah. And I think this brings us to an interesting point, which I get as a question I get a lot is, Mao, the banks are coming. What are you guys going to do about the banks? The banks that are coming, and they're going to start offering these loans. And so I have two points to answer to that. Number one is, banks are not built to operate on this technology. Banks close after hours. Banks close on the weekends. They're used to lending against stuff that doesn't trade 24/7. They're not used to managing risk this way. Not only that, like their service infrastructure is not set up for this. Their risk engines are not set up for this, right? And it's going to take them. It takes a monumental restructuring of their operations to start servicing 24/7 a 24/7 tradable asset. This is not, and also they're not built to operate globally. They're built to operate in geographic specific zones. Mm-hmm. So you, by virtue of that, you don't have 24-hour coverage. Everybody sleeps at the same time. Everybody wakes up at the same time. So it never matters, because your hours of operation are very well defined. You need to be able to reach a global audience. You need to be able to operate 24/7, and you need to have your engines built to support a global, an asset that trades globally 24/7. So it takes monumental effort on their part to do this. And the other point that I will say is that, historically speaking, Bitcoin started because of the banks. Like, it was the banks that let us down that created the incentives for us to create Bitcoin. If banks actually did their job, and I'm going to steal this one from Paulo from Tether, because I love that he said that. If banks were doing their job right, Ledn wouldn't exist, and companies like Tether wouldn't exist. Because all we're doing is filling the gaps that they've deliberately created. Yeah. Right? And so now you're asking the same people that are going to come and close those gaps. And then, so I find that it'll be very challenging. I'm sure some of them will try, but the experience you're going to get at a bank is never going to be what you're going to get at Ledn. We were built for Bitcoin. And but then the other point that I'll make to you is, in terms of size, people talk about banks as if they're these behemoths that are really big, and I'm not disputing. They're very, very big. But we have we work very closely with Tether, and they're a strategic investor into our company. Tether, if based on the rumored valuation that they were seeking in their in the articles that have been published, they're rumored to be seeking a valuation of $500 billion. Okay. There's only one bank in the world bigger than Tether at that valuation, JP Morgan. At $500 billion valuation would mean Tether is bigger than Goldman Sachs and Bank of America combined. And so again, this industry has grown up, and this industry has now access to capital and distribution networks that are they're getting increasingly closer and closer to that of the largest banks in the world.
So I'm wondering how you see the future, where now a lot of people, at least some people I know, are borrowing against their Bitcoin to buy real estate, right? Their premier store value is Bitcoin. They're using it as collateral to buy a home as a utility. What happens in the future when the perception of store value switches from homes to Bitcoin, and Bitcoin becomes more like a primary store of value, and perhaps kind of takes away a monetary premium on real estate, which I personally think will take a long time, but maybe we'll see that in our lifetimes. But you know, I see you recognize where I want to go, so I wonder what you think.
You're describing why we built Ledn. Like you're describing exactly why we built Ledn.
This is not scripted. Okay.
No. But what I'm trying to say is, okay, if I were to ask you, Bram, what made a person, what makes you money? Is it the house that you bought, or is it the mortgage you took?
It's the mortgage you took at a certain point in time where you didn't even realize what the interest rate would do. And I think this, please explain this, why people need to understand that some people do have a home with a cheap mortgage, because my translation is that's luck. It's just in time you were...
The boomers were very fortunate. The boomers were very fortunate because what ends up happening, so let me walk you through a very simple math exercise, and you can surface the data if you want to go and look at it after, but I'm going to walk you through it without even having to look, okay? If you look at, and again, how much is the US dollar losing in value year over year? Let's answer that question to explain why the mortgages are such a beautiful vehicle to build value. Beautiful, no. It is engineered to accrue value to the people that take mortgages. And then I'll walk you through what the incentive is for that. Number one, if you look at the CPI, so let's go at US, the United States, they determine inflation by CPI. Let's see what the CPI percentage is.
That's generous. I want to say that's generous.
So CPI, if you believe the US Bureau of Labor Statistics, CPI in the United States is 2.7%. over the last 12 months. So they will tell you the dollar is losing value at a rate of 2.7% year over year, okay? I want to take a different look at a different data point, which is the US government deficit, okay? This is how much money the US will spend above and beyond what it can make. The US deficit, and you can look at this at the Congressional Budget Office, is slated at $2.2 trillion for 2025. That was last year's, okay? Now you say, okay, the US is spending $2 trillion more than it's making. Where is it going to source those dollars from? It's going to print them. The Fed's going to print them, is going to lend it to the Treasury, right? To fill the hole. That's $2 extra trillion that got injected into the money supply. Mm-hmm. What is the total size of the US money supply? $18 trillion. So what happens when you add $2 trillion to 18? You devalue the value of each dollar by 10%. So the dollar, you can look at this. They're telling you the dollar is getting debased at a rate of 10%. They're telling you inflation is 3%. The mortgage rate in the United States right now, I think, is somewhere in the 7%, 6 to 7% range. Okay? The dollar is getting debased at 10%, okay? So anything that you can borrow under 10% and you invest it in the hard asset, you're getting ahead, right? Now, they have to create this illusion that they're debasing the money at 10%, but inflation is only really 3%. So if you look at a mortgage, you're paying 6%, and you look at that and you say, oh, well, it's a little more than inflation, but I guess we'll be all right, Debbie. Let's go back into our home and, continue making our mortgage payments. Unbeknownst to them, their property is appraising at the rate of the debasement of the dollar. So their home is appraising at 10% year over year. They're paying 6% on the debt. That extra 4% is what keeps accruing to your equity year after year after year after year. And here all along, you think you're a genius, right? Because you're great investments. But in fact, it was because the government gave you a mortgage that was artificially below the cost of inflation.
The cost of the money, basically.
The cost of the money.
Yeah.
Why would they do that? Why would they do that? That brings us back to our first point, which is in order to get a mortgage, you have to demonstrate that you're paying all of your taxes. All of your taxes, meaning you're paying 40-50% taxes, okay? So the government is basically, and then here's where the math, here you're thinking they're giving you a deal, okay? But what really happens is, if you tack on 50% of your income, and they tell you, well, you know, let's say you're making $100,000 and you're giving the government $50,000 every year, okay? That 3% that you're saving over the year is actually less than what you're giving the government.
Yeah.
So the government is a huge trade for them because they'll dangle this carrot on you. They'll dangle this 6% mortgage carrot. But what you don't see is that the price to eat the carrot is that you're forced to work for someone else and pay the full clip of taxes because, God forbid, you start your own business and you try to run some efficiencies and you don't pay yourself a salary until the business is growing because you want to build something. And then all of a sudden, oh, Bram, you're not a trustworthy borrower because you don't have fixed income. I don't know how many. And so it's a you scratch my back, I scratch yours, right? Between the banks and the government.
I find this really interesting because we're approaching, I think, what a lot of people in Bitcoin or Bitcoin finance talk about, but kind of from the point of view where I would usually say people do this because other people do this, right? You get a mortgage and like this is what's been told or sold to you. I think a few things I'm thinking about is, well, your home can go up in price nominally, right?
Correct.
But once you capitalize on it, let's say you sell, right, and you want to do what's been told to you before, basically, you know, when you get your first home, it goes up in value. At some point, you sell it, then you buy a bigger home, etc. With everything you just said, and I think people can relate to this, you can see that is not possible anymore. Right, so
no,
it's growing, but you're not buying more value. You're not buying more meters when you sell it, right? Yeah,
correct. Yeah. And again, going back to the point you were making around what makes you the money, is it the asset or is it the financing? The asset. If you think of Bitcoin and gold and real estate, at the core, what makes them similar is the fact that they have a very low stock to flow ratio, right? Like Bitcoin has finite supply, gold has very small supply, and we cannot print homes as fast as we print dollars.
Yeah, I wanted to say a home is hard-ish when you say
hard-ish. Yeah, exactly.
Yeah.
So everything has a different profile, right? Mm-hmm. Now, depending on technical attributes, right? Like Bitcoin is far technically superior to gold, right? But gold is more entrenched culturally, and so there's certain external factors that affect price in different ways to all those different asset classes.
And demand, right? Demand.
Correct.
Yeah.
I believe that my generation and your generation is going to much prefer to build their wealth in Bitcoin than real estate. Why? Because our generation knows there's a big world out there. We're the internet generation. We're connected. We want to explore the world. I want to be open to potential opportunities that may come up in different places. When you own real estate, you're constrained, you're castrated from taking those opportunities, right? Like if you own a big property with your wife in, I don't know, Europe, and somebody says, Bram, I need you to come join me to start this amazing company in Florida. Come tomorrow. If you own a property, all of a sudden you're like, oh man, I got to sell this. I don't want to sell this. Should I rent it? Should I not rent it? What am I going to do with it? What am I going to get over there? Do I rent? Do I buy? If you had your money in Bitcoin and you were renting your house, you would say, okay, I'm going to send my 60-day notice to my landlord. I'm going to start looking for places to rent, and I'm just going to get on a plane and go. And then when you need financing, you can get the financing just as you would have with the house, faster, easier, with less red tape. And so now Bitcoin gives you the same access to finance that the house used to. It's portable. You can take it anywhere. It protects value just as good, if not better than a house, better than gold. You can send it to anyone, anywhere, anytime to pay for anything. You can convert it. Think about if you wanted to sell your house tomorrow to invest in a business. How long would that take? What if you wanted to sell your Bitcoin or borrow your Bitcoin to start a business? How long would that take?
Yeah.
Take a minute. You would have the loan in a minute.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue. What then happens with homes? Because in my mind, the fun thing is that when you get to that point and you have Bitcoin, you can actually purchase a bigger home over time. You can actually have that mechanic where you could actually grow your home along with how your life grows, basically, right? From perhaps being single or being a couple, having a family, etc.
So my view on this is that Bitcoin will become the cornerstone of people's portfolios in the way property is the cornerstone of people's portfolios today. So that role of the real estate investment will be overtaken by the Bitcoin investment. And you're going to see a lot more our generation is going to want to structure itself to be a lot more mobile, right? Like a lot more the ability to move from one place to another. And that means that real estate will stop being such a sexy investment, right? Because the reasons, if you look at our generation, we want to be entrepreneurial, we want to be mobile, we want things fast. Real estate is none of those things, right? Like it's none of those things. And so real estate, you're going to see our generation is going to this idea that the boomers had, where you had to buy your own home, it was like a status symbol to own your home and have a paid off for home. I think the status symbol for our generation is going to be you have Bitcoin. You know, you have Bitcoin, cold storage. You have an estate plan. You have it set up for your kids, and you will you buy a house? Definitely, at some point, if you have enough money, you'll buy a house because for estate planning purposes, for diversification purposes, right? But it's not going to be, the house is going to start looking a lot more like a utility asset than an investment.
Yeah.
Does that make sense? Like when I buy my car, when you buy your car, do you think you're going to make money on your car?
No.
No one does. Yet we still buy them because we need a car. The house.
Well, maybe if you buy a crazy Ferrari, right? But that's a different level.
No,
like
but
some people do, but that's scarce. That's not.
But they're buying a different car, right? Like
exactly.
That's for a different type of idea, right?
Exactly.
But from the point of view of utility, you're going to start looking at houses a lot more like you look at cars today, right? Like, does it matter? Like that you didn't make money on the car? Did you buy it with the purpose of making money on the car? Mm-hmm. Like I'll tell you, with the properties that I've invested in, I have zero intention of making a return on the property. It's where I live, right? Mm-hmm. Like I don't think of it as, oh, I'm gonna get wealthy because of it. No, what's gonna build my wealth is gonna be my Bitcoin. And sure, I'm not gonna lose purchasing power nominally with the property, and I may gain nominal value, but I'm not going to get any real value from it.
Everything you just said, I think, sounds crazy to a lot of people that have learned or think they have learned, right, or think they should use real estate to build wealth, right? And I think we're touching upon something that for some people could be a trigger to think deeper, as in, for me, this is part of the fiat money scam, right? Literally what you're just describing is like you're telling people to do certain things, but eventually it fuels this entire system eventually against your own individual benefit, because that story, what your grandparents had, and also to a degree your parents, when I think about my life, I don't have.
Correct.
Right? Some people in my generation do have that, but that's why I said luck at a certain interest rate, right? I mean, I know people that have a home with like a 1.2% mortgage, like right on this ZERP, area, and I mean, they're lucky, but they don't understand they're lucky. So I think that's interesting.
Some of them do get it, because if you look at one of the big problems in the U.S. right now,
they can't buy another house. That's interesting.
They can. They don't want to.
No, I mean, when they sell it, they cannot afford what the other house, if it would be bigger, would cost them every month, because now the interest is, I don't know, 4-ish or whatever, right? So they see that difference in what it would cost.
But it's not the house that they're not going to part ways with. It's the mortgage.
Yeah. Good point.
It's never the house. That's what I'm trying to tell you.
Yeah, good point.
It's one house doesn't make more money than the other. It's the mortgage. It's the mortgage. It's the artificially inflated mortgage, because what happens when the economy starts going in different ways, the government is like an orchestra director, okay? It wants the economy to always be playing a certain beat, right? And so when the economy's beat starts going low, they go, lower the interest rates, increase the incentives, and then people come and they say, oh, I wasn't planning to buy a house, but if you're going to give me the money to buy the house for free, like if you're going to give me money at 3% and I know inflation is 10, I'll take the money to buy anything, literally anything. And that's what happens, right? And then the mortgage, the rates, then the music goes back to the normal beat, the beat the Fed wanted. And they said, oh, we can't let it go higher. Raise the rates, right? And so they're like, oh my God, no. And so again, is it that you didn't want to, is it that the house that you like changed? No, you just can't afford it anymore because Mr. Government said raise them, and then all of a sudden the house you wanted is gone, right? And we keep going into these fiat traps, right? Like, so I think understanding these games, understanding the data that you're reading, because don't get it twisted. The government will try to gaslight you. They will try to make you believe inflation is 3%. Because if you don't believe inflation is 3%, and you actually see that they're debasing the currency at 10% but lending you money at 6%, you might try to game that system. Does that make sense? And so they have to create it's a very complex illusion that they have to deliver. Mm-hmm.
Yeah, I think it's just a branch of the what is money question that is just never answered, right? It's just like you're just participating because other people are participating, and this is basically how you do it. And for me, this is also why Bitcoin is such an opportunity, right? Like if you dive into it and you study and you understand that based on these on the characteristics that we've also talked about before. Yeah, it is superior, but it's not even at the level of how it's embedded as, all these other either assets or ways people think they can create wealth, right? So when now you are doing this, I assume you are working with whatever is, policy and law and whatever in all these different jurisdictions. Do you see a shift there? Like, are you adapting to what is there, or do you already see that there are things changing because maybe TradFi or maybe governments, I wouldn't even know how to classify it, but like they are seeing that there is something happening, right? Like I'll tell you my biggest thing I'm watching, like for example, what Saylor is doing with Stretch. Whatever people think of strategy is irrelevant. I think Stretch is an extreme competitive product to just general debit and savings accounts, right? Like from a global perspective also, right?
Correct.
So not even when you're in America, he also has a European product. So I think that's an extremely dangerous product that could take away the fuel from the fiat money system, right? From my perspective, what I know of Ledn, it's kind of like in between, you're weaving in and you're let's say working both sides and you're trying to figure it out. So my core question is like, do you have to move around stuff, or do you see stuff changing because more TradFi people or jurisdictions or countries, whatever, are waking up to the fact that people are in some way, shape or form finding this Bitcoin thing?
Yeah, so great question. So what I'll tell you is, we are a regulated business, and we are in the business of lending dollars. So to lend those dollars, we have to find institutional lending partners that will lend us those dollars. And the thesis at Ledn always was that who has the most dollars at the cheapest cost are the most regulated entities, right? Banks, pension funds, insurance companies, etc. So in order to source those dollars, we would have to be able to speak their language, meet the regulatory standards, meet the risk thresholds. And that's been the thesis from Ledn from day one. So Ledn is it's a regulated business. We have the strongest risk management program in the industry. We were the first to do proof of reserves. We're regulated under SEMA here in the Cayman Islands. We're regulated in Europe under the Spanish Central Bank. We're going through our MiCA application. So that's a framework that's just recently getting stood up. So we're going to be going through the MiCA framework to get that this year. Actually, in short term, we should hear news from Ledn on that front. We are also paying close attention to what's coming down from the U.S. in terms of the Clarity Act, because there seems that there's going to be a new framework that's going to be stood up in the U.S. So we're going to have to fall into that because we service the U.S. market. So we are seeing governments start standing up regulatory frameworks for our industry, and they're doing this because so many people are using these products, and so many people want to have more assurances. Basically, the governments have realized that if they don't embrace this, they're going to become obsolete. And the companies, if you look at what happened in the U.S. under the Biden administration, when they went antagonistic against the industry, the industry fled the U.S. at supersonic speed, because that's the other thing. These businesses are global and are mobile. I can run a Bitcoin business from basically anywhere in the world, right? And so if you don't have the right incentives, you'll just go to where the right incentives are. And governments are waking up to this and saying, oh, no, we can't let all these smart people leave our country. We have to create the framework for them to stay. In fact, our framework's going to be so good, we're going to take people from other countries to come invest here. Right. And so I'm very optimistic at what I'm seeing from a regulatory front. Not every framework is perfect. Not every, they're not all created equal. But the fact that we're having this conversation is a good thing, in my humble opinion. And obviously, we will continue to comply and come under different regulatory programs that apply to us, because, again, we're in the business of borrowing funds from the sort of most trusted and reputable high credit quality entities, and these are very regulated entities. And so that is Ledn's value proposition, is Ledn wants to be the most transparent, the safest, the most reliable place. We have the longest track record. We've survived everything the market's thrown at. Since 2018, we went through COVID. We went through the collapse of all of our competitors. We refinanced some of our clients out of other competitors that went bankrupt. And the other thing I'll say is, you're going to see, because this is such a great product, and because so many people are interested in Bitcoin-backed loans now, there's a lot of people coming out with offerings. And what I would like to say to anybody listening to this is that not all Bitcoin-backed lending companies are created equal. The primary thing that you should look for when you're considering Bitcoin-backed loans is, who are you trusting that Bitcoin to? How long have they been around? Do they have proof of reserves? And what are they doing with my collateral? How can they prove it? Mm-hmm. Right? At Ledn, the only loans we do are with custodied Bitcoin, meaning the Bitcoin sits in custody at all times, either at Ledn's or one of our funding partners like Tether or other banks.
Yeah.
And it stays on chain at all times. We can see it. It's not moving. And it is legally, whenever we pledge it to one of our lending counterparts or institutions, that Bitcoin is always Ledn's Bitcoin. It's legally ring fenced to be Ledn's Bitcoin, meaning that if any of our partners ever have any issues, that's still Ledn's Bitcoin. We can claim it back and give it back to our clients.
Yeah.
So we have built what we believe is the most resilient, safest, strongest, most battle-tested Bitcoin-backed lending operation in the industry today.
Yeah. Like on UTXO level, you mean also?
How so? So
you said like ring fence, this is yours, like the actual UTXOs.
Oh, it is on chain. Yes, like the UTXOs are on an address that we can see at all times, and also legally ring fence. That's a legal agreement.
Yeah. So I think you just mentioned something interesting, right? There are liquidity providers on the dollar side. They obviously ask for a certain return. You are in between. We talked about how Bitcoin is pristine collateral, and in my opinion, something maybe you can share about that. The understanding of the difference of risk of the different types of collateral, right? Well, depending on how you look at it, as the liquidity provider for a Bitcoin lender, right? I think the more you understand Bitcoin, the lower the risk compared to the other types of collateral, right? But where I want to go is that the cost rate on the dollar side can fluctuate, obviously, because there's something happening with the dollar, right? But at the same time, you see Bitcoin, growing, becoming stronger, more valuable, etc. So I wonder how you look at this balance between, perhaps the risk in dollars is rising, but the risk in Bitcoin is going down. How can you overall, and this is my question, get to lower cost, right? I mean, eventually, I assume you want to get to a point where you become actually competitive to any other type of loan where you have to put up a collateral.
Yes. So great question. And I think this goes to the difference in cost of capital between, say, a mortgage or a Bitcoin-backed loan. Yeah. Okay. And I think the biggest mistake that people make is they compare a mortgage from a tier 1 bank, the rates on that, to a Bitcoin-backed loan. And the question becomes, but if Bitcoin's better collateral than the house, why am I paying more for it? Mm-hmm. Right? So again, this goes back to the first question we tackled, which was the underwriting model. Okay, so number one, the mortgage is a loan on your income. The mortgage is not a loan on your asset. If you have no income, you cannot access that 6% mortgage. Does that make sense? Yeah. If you have no income and you try to go to a B tier lender, a lender that has more welcoming underwriting standards, the cost of that mortgage is going to be equal or higher to your letter loan. Mm-hmm. Because in the non-subsidized world, so what does a tier 1 mortgage mean? It means that because the bank
subsidized world, sorry, I love that. That's great.
No, but it is. That's what it is.
It's not real, right? That's
it isn't real.
Like it's not a real perception or determination of the value. It's basically, I love that.
It isn't real. It isn't real because a mortgage is based on a curve that also isn't real.
Yeah, like it's a prediction, basically. What they do is a prediction for the return, right? Yeah.
Okay. And the reason banks play ball with this is because the banks don't have to hold the risk once they issue the mortgage.
Exactly.
The banks just basically issue the loan and they sell it into Fannie Mae and Freddie Mac that are backed by who? You, the taxpayer, right? And so again, the bank is just like shedding off risk and clipping origination fees.
Yeah.
They're not in the business of making a spread, right? Oh, and who's buying all these mortgage-backed securities? Fannie Mae and Freddie Mac, government entities.
This is probably another podcast for an hour because you're touching up on a subject that I had a crazy thread on with Grok, actually, because people don't know that it works like this.
No.
Right? So what you're doing is you're fueling a pile of money, right? And the pile of money is being lent out. It costs a certain amount and it's being lent out at a certain amount. But the person that is, or the entity that's servicing you, the bank, actually has no risk because there's also the home as the collateral, right? But why do banks blow up? It's because they get fucking greedy, right? They go way too far with the game. And I think a lot of people don't understand that this is how they're being taken advantage of, right? It's you're giving them free money and they can earn free money because it is just a self-perpetuating loop of capital that just keeps on growing. I wonder if you agree, but that would be my very, very short.
No, I would be largely in agreement with what you said. I think the way to look at these mortgages, right? Like at these mortgage rates, if you follow the flow of the money, right? If you follow the flow of the money, the government buys back the mortgage from the bank, right? So it's the government lending you the money. At 6%. And why are they lending you that money at 6%? Because you're paying more to them in taxes every year to get that money. They verify. The bank's role is to verify that you're paying the government more in taxes every year than what the government's losing by letting that loan out to you at 6%. Does that make sense?
Yes.
That's all the bank does.
Yeah.
The bank just checks this and says, are you paying more taxes than what the government is going to lose by advancing you this free money, sir? It's an incentive.
And this is also why governments bail out banks, right? This is something that I've never understood when I was younger. I was like, why does this even happen?
The line between banks and governments, the line that divides banks and governments is artificial. There is no distinction. They operate one and the same. Not to be a conspiracy theorist, okay? I don't want to talk in extremes here, but if you think about it,
just the incentives are aligned.
They have the Venn diagrams of incentives. Like it's a complete overlap, okay?
Yeah.
And so obviously, the bank is doing the work of the government to create something, because what the government wants, if you think about it, is you want people that are orderly, following the rules, not being too crazy. And if you have a mortgage, you have an obligation to pay. You've demonstrated that you're paying taxes. You're living paycheck to paycheck like most of America does. The chances of you becoming a revolutionary and getting some great ideas to change the government are very slim because you're too busy waking up, going to work, getting your paycheck, paying it back. And so they want to keep you in this dependence wheel, right? And to me, it's almost like an element of control. Right, and I get to bring it back to why this is why mortgages are artificially low. Okay, I would argue that a tier 1 mortgage, like, hold on one second, I want to see.
Well, like in the 70s or 60s, 70s, I recently talked to George Bodine, who is 70, who said my first mortgage was like 14%. Right? That would be a better representation of the risk, value, etc.
Yeah, so you see here, like I'm looking here at the rates for vehicles, okay? And interestingly, there's a 7% rate for new vehicles and 10% for used vehicles. If you look at don't look at the new vehicles, because the rates to finance new vehicles have all sorts of sales incentives, and the people giving you the financing is the people making the car, so they've subsidized the financing, so you pay more for the car. So let's look at the used car, which is the less disconnected one, 10%. Okay, how much is Michael Saylor paying for SDRC? 11%. Okay. That, Bram, is the real cost of a loan in the non-subsidized world. Does that make sense? And so,
but it's unique, right?
The outlier isn't the Bitcoin-backed loans; it's the mortgage.
Yes,
this is all I'm trying to show you. What's out of whack is not the cost of capital for the Bitcoin. What's out of whack is what people are trying to get you to believe that that is. And again, think about the incentives, right? If you see a house and you say, oh, I can get 6% for that house, all I have to do, all the bank wants is 3 pay stubs, and for me to make X, oh, sweetie, I'm going to go get that job so we can go buy that house. And then you go and you get your job and you become a good citizen and you start paying all your taxes, your pay stubs to get to the bank, and then you get into the hamster wheel. And to the government, you're an outstanding citizen. But to you, you've basically sold your entire life of dependence because the hamster wheel had a little bit of cheese dangled on you that was a 6% mortgage, right? But I don't want anyone listening to this to feel like, oh, I'm on the hamster wheel. We've all been part of it. We've all lived we were all born into this matrix, right? And everywhere you go, everywhere you look, everybody's trying to tell you like, oh, the matrix is beautiful. Come here. Did you see this new software update? You download their software update into your brain and look, it's great stuff. But every so often we have the opportunity to get somebody that has a truly that sort of snapped out of the matrix. Like most people haven't even asked themselves the question, what is money? Why am I holding this? And so it's what I'm not here trying to tell you that everything the governments do is absolutely wrong and horrible and that, but what I'm trying to say is you should question. Never take anything as a given. Try to question and understand that the reason I got into Bitcoin is because I was reading the same books everybody was reading, which is money is you save money on fiat. You put little money away for a rainy day. You don't borrow. Debt is bad. Don't take debt, right? And I was doing this in a hyperinflationary environment, and I was getting wrecked. The money stopped working. My dad was doing the complete opposite. My dad was taking loans, shorting the currency, not saving in bolivares, and he was thriving. And that forced me to rethink everything I thought I knew about money. And it was only then that I got to Bitcoin. But it's not a simple thing to snap out of it and see it for what it is. Yeah. It takes time, and you have to go against a lot of the stuff that you learn from a very young age, and you'll have to go against people you consider to be very smart.
Okay, I want to wrap up with two short questions. I do want to go back to what I said before. We kind of frame it differently. In order to get to that point where Bitcoin becomes that main store of value, where people prefer to use that as a collateral, that makes a more even playing field, I would say. What makes you most bullish on how that's going to happen for a lot of people?
What I think is going to there's two things. Number one is, as more and more governments, the reality is that even though a lot of Bitcoiners, and I want to say we're unplugged from the matrix, right? A lot of people still like investing in things that the government has reviewed, that the government protects, that the government backstops, that the government understands. And so these regulatory frameworks that are standing up, the ability for banks to offer these services, most people won't go to banks to buy Bitcoin, but the fact that banks now sell Bitcoin will give them comfort to come to Ledn. Does that make sense? Because it's now accepted by the powers that be. It's more about the signal than the actual people's desire to go to banks. It's more about what it signals than what it actually means for business activity and the banks themselves. It means the governments have gone through it, they've written laws, they've updated the regulation, now everybody can do it, and they get how they can do it, and they're going to catch the bad guys if something bad happens to you. That's what most people want to know, right? Yeah. And so that's going to help people get more comfortable, and then price is going to do its thing. Because what's going to happen is the government's never going to tell you, hey guys, we're printing way too much money, you should go buy some Bitcoin. Those are words you will never hear from the government, nor will you hear them say the same about houses or stocks or anything. According to them, people only buy homes to live in them, and people only buy stocks because they think America builds great companies. And God, no, there's certainly not speculation in these markets. It's perfectly investable, right? What's going to happen is people are going to start seeing the cracks in the systems, because the thing about the fiat system is that you can only get away from it by printing more and more and more. So what's going to happen is the velocity of the debasement of your currency is likely going to increase. And you yourself are going to see Bitcoin prices rallying and house prices rallying. And all of a sudden you're saying, why am I holding dollars? Why am I holding the only thing that's not rallying? Like, this is dumb. I need to sell my dollars to buy something that is rallying, and you see it as rally, but really it's just protecting its purchasing power. Mm-hmm. Yeah. And so, and you yourself will get there. You yourself will get to Bitcoin by your own incentives, out of self-preservation. And then you yourself will get to the idea that you shouldn't sell the Bitcoin. So you're going to say, who can give me a loan? And when you Google that, we'll be right there.
All right. I want to ask you the last question, and I ask everyone the same question, which is, what is a core belief you will never let go of?
Ooh. A core belief that I will never let go of. You gotta love what you do. Like you have to love what you do. People talk to me. A comment I get often is like, "Mao, why are you so animated? Why are you so passionate? Why are you so this? Why are you so that?" I love what I do. I genuinely love what I do, and that makes it not feel like work. And that is the only way you're going to get to the point where you can outperform, outwork, out-hustle, out-grind everyone else. It doesn't feel like work. You will find that. All of us will find that eventually. We don't know what it is. When I was born and went to school, Bitcoin didn't exist. I didn't know what I was supposed to do. Then all of a sudden I found this thing and I felt enamored by it. And I had no idea how I was going to make money off of it or how I could dedicate my life but I still went through it because I loved it. And lo and behold, we worked so hard. We built a solution for a big problem that us and many other people were facing. And 8 years later, here we are. But the basic core belief is that I love what I do.
Awesome, man. Well, thanks so much for sharing. Thanks so much for your time. I really enjoyed it. This was a good exploration. And let's do it again sometime, man. Thank you. Appreciate it.
For sure, man.
Cheers.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode. Bye.